Hello, guys. Good morning, good afternoon, good evening, depending on where you are watching us from and the time that you are watching this video. Okay, so we want to continue on the lessons. All right, so today I want to talk about trend lines. Trend lines. I believe that those in the what do you call it, the old classes. I mean, people from our guests and the September classes, you might have done what I'm going to show you. However, this is a modified version, so it's still good to go through this as well. All right, so this evening, or yeah, it's almost 12 a.m. So we are going to learn about trend lines. Okay, trend lines, trend lines. So just as the name suggests, I believe that you understand it. Remember, we said that we have two types of trend, two types, right? Uptrend and then downtrend. So we say trend line. So it means that these are lines that we draw when the market is either in an uptrend or a downtrend. Okay, that's literally it. Okay, this can be very useful if you know how to do it and do it right. Can make a lot of money using this if you do it right. Okay, so first I'll illustrate how it appears on the chart, and then we'll try and see it from the chart itself. Okay. So pay attention and then practice this after the lesson. Submit your assignment to me so I check um, to see if you understand what we are doing here. All right, so let's say the market is in an uptrend. Just like we have seen from the previous videos, we say that when the market is going up, it be forming stuff like this, right? Keeps doing something like this. Yeah, and then it goes. So if there is a way that we can connect the lows here. Okay, if there is a way we can connect the lows here, then it forms a trend line. If there is a way we can connect the highs here, that also forms what we call a trend line. So we can draw a trend line, a downtrend or an uptrend, just like I said earlier. So um, this is the thing. You need only 2 points to draw your trend line, but then you have to have at least three touches or 3 points on the chart to make it a valid trend line. So the fact that you've drawn something doesn't mean it is a trend line. That's what I mean. So let's say when the market was going up, I drew this here. Okay, I drew something like this here. That is before this side formed. So I would adjust this to suit the trend line. Okay, so we understand what we are trying to say. Steady here. So I'll try to adjust this thing. So what you do is that let's say by the time you met the market, it has done this. Okay, maybe it was somewhere here. So you have drawn this trend line. So all that you do is that adjust this. Okay, move the trend line, move it. You move it somewhere here. And then what you're expecting is that market will rest on your trend line. Okay, it will rest on it even as it progresses, it will continue to rest on it until it finally breaks out from your zone. That is what you are expecting. Let's do some for the bottom part. So this is the case. It's not always that you're going to get both the top and then the bottom. Okay. So you see the highs here, the lows here, higher lows. So this we did this for we connected the higher highs. Let's try and see if we can connect the lower lows. So the same thing, you you do this, right? And then you extend this, hoping that markets would respect it. So yeah, you would expect it to rest on it, something like this. So you see that it's moving within this term, but you can see it's still progressing because this high is higher than this. So this is a clear uptrend. So this one too, we would expect something like this. So it forms like so we can have only this one sometimes because sometimes you cannot connect this. Okay. it wouldn't make sense. So you let it be. And then sometimes too, we can do for the top, and then we wouldn't have the bottom. We wouldn't have this. So how are we going to take advantage of this? Now it's important to understand one, the trend, two, to understand how to draw the trend lines appropriately, because if you get it wrong and you still use it, you are going to lose money. All right, so let me put this one back there and see what we could have done in this scenario. So over here, what we will do is that clearly the market is going up, right? So we can take a buy when the market comes here, and then we can decide to hold the buy. When it gets here, we will take a sell, but this will be a short sell because the market is what, in an uptrend. So we sell from somewhere to maybe here, and then we are off. Then we wait for price to hit here. If you didn't join the buy, you can enter here. Okay. Same way when it gets here, you can sell. But you see that when it gets here, you should be out. But the buy, you can hold it because the market is going up. You understand? It's going up. So you can pick another buy here if you missed. So you can have this buy meaning you have two positions, this buy three position, this buy four position. But for the sales, we take it from here. When it's here, we leave. We take it from here. When it's here, we leave because the market is what, in an uptrend. We are only taking advantage of the drop here. And the drop here is what we call retracement. Okay. This is retracement, but this is what the actual trend. This is the actual trend. So it's important for us to know the actual trend of the market so we will know exactly what we are doing. So that when we are buying, we know we are buying in line with the trend. When we are selling against the trend. Okay, we are only selling the retracement. When it is like this, when you are buying, okay, you can allow, some meaningful risk. But when you are selling, because you are trading against the trend, you should reduce your risk by using out a small lot size. When the market moves in your favor, use what we call break even. Move your stop loss to your entry to secure your trade so that if the trade should reverse, you don't end up losing your capital. Now, the reason why we are doing that is because we know the sales are going against the trend. But as the market moves, it goes up a bit and then it drops for a bit, goes up, then it drops for a bit. That's how it progresses up. You can turn this around and that will be for what, a downtrend in market. But we'll see that when we get to the chart. So I want to believe that we understand this. Now, if you're able to connect both the highs and then the lows, it forms what we call a channel. But you can see that this channel is progressing upward. So we call this an ascending channel. This is what an ascending channel. If we turn it around, I mean a downtrend, and then we are able to get, the support and then the resistance, then that forms what, a descending channel. Okay. It's not always, like I mentioned, it's not always that you can get the two. Sometimes you only get this, sometimes you only this one. All right. But then in each case, it does the same thing. Remember, this when market hits here, we say we sell. When it hits here, we sell. It hits here, we sell. So it means that this is what we call a support resistance trend line. So this, I mean that we call this one resistance trend line. Oh, sorry, resistance trend line. I mean this one, the top one, and then we call the bottom the support trend line. Support trend line. Right. Good. So just like we know that we buy from the support and sell from the resistance, it's the same idea that we are applying here. That's why I said over here we sell, we sell, we sell, we sell, we sell. Here we buy, we buy, we buy, we buy. You understand? That's it. Okay. I want to believe that this is clear. I want to believe this is clear. Right. So let's get into the real charts and then see how the market behaves. Let's see how the market behaves around these trend lines so we can apply it in our trading. Okay. right? So I used one today. So, and then I forgot to mention something. I forgot to mention something. Use the higher time frame for a stronger trend line. Okay. Use the higher time frame for a stronger trend line. If you, although you can find trend lines on the lower time frame, yeah, it happens, but if it's on the higher time frame, it's stronger. Okay. It is stronger, and most of the time it plays out. Most of the time, the ones on the lower time frame, if you are not lucky, you will lose. Okay. Yes, so let's try our best to identify it on the higher time frame. Okay. Try our best to identify it on the higher time frame. So today, um, just like we saw the other time, said that this market is an uptrend, like we all can see, it's a clear uptrend. Now we can see that as the market was going up, as the market was going up, as usual, forming the lower lows, lower highs, lower lows, lower high. So let's try to see if we can connect the lower lows. So most of the time in an uptrend, try to connect the higher lows. Sorry for that. Try to connect the higher lows. Okay. And then in a downtrend, try to connect the lower highs. Okay. To form your trend line. So I'm going to start from here. Okay. So this, pardon me, my cursor is disturbing. I'll get it right. Yeah, something like this. Okay, so when the market form, just to me, I want to put it here. I will get it. Yes, then I'll adjust this one. Yes, good. So, I mentioned that you can use 2 points. You need just 2 points. So I use this higher low and then this higher low. Then what you need to do is to extend this. Okay. So look at what I'm doing. I'm going to extend it, making sure that still it touches this level. Okay. I'll make sure it touches that level, this one. So I have my 1, 2 here. Now let's see what happened today. Why this one? Okay, let me leave it like this. All right. Let's see what happened today. So you see that I think this even happened yesterday. This one happened yesterday. When the market traded, it dropped all the way back to it for the confirming the third time that this is indeed a trend line. We had a buy because this is what a support trend line. You see that when the market hit it this time, over here, it went up. So if it should come back to it again, that's the expectation. If it breaks it, then we know that the market is going to drop. It's going to sell. Okay. But when it approaches it, it's like, okay, this is a support trend line. So when the market hits it, I'm expecting a buy. So it bought for a while, didn't go far, and then it came back to it again, and then you see it went up. So today we took a buy on gold. This is the reason why we took the buy. Okay. This is the reason. We saw the price has come near the support trend line. So what did we do? We zoomed to the lower time frame, and then we saw that yes, indeed, look at it. There was a change of character here, right? After the change of character, price retested and boom, gave us this beautiful buy here. So we got this buy today. We got this buy. Yeah, so if you have, I think I shared something. I don't know if I shared it in your group, but yeah, the trade I took on gold. I hit TP today on gold. Yeah, it's the same idea. Okay, so if you understand it, very well and then you apply it, you're going to make something for yourself. Yeah. Remember, I mentioned there are several ways to do the analysis. We have studied about two. Now, this is the third one. I'll add, I think, three more or so, then you'll be good to go. Mm. So, this is another one, another way to do the analysis. So, we bought because price came around this trend line. change the character here. So we knew it was time to buy. And we took our buys from here. Okay. All right. So this is that for SAU USD. This is that for gold. hmm Let's see something interesting on think Euro USD. Now on Euro USD, let me take it off. I had already done this. So if you want to see it clearly, you see the trend line clearly, you zoom out. Okay, zoom out and see if we can identify it. Now, when you look at this, you see that market is going up. It is an uptrend. If it is an uptrend, then you are going to look for a support trend line. Okay, so you try to identify some two higher lows and then draw them. Okay, so I'm going to this, let me do this thing first. So this is going to be my target. This is also my target. And then maybe, okay, so I said that let's identify two, then we will um uh, extend it. Okay, so let me put this one here. I'm going to drag it to touch them. Okay, see, so I have this. So I have price touching this point here and then that point here. So you see, you draw the trend line from the previous market, but you know you are going to trade the current market and the future market. So you have to extend this into the future before you can take advantage of it. So all I need to do is to drag this, just to extend it. Keep on extending it because it will be useful. Making sure that yes, it's touching it, it touched it here one, touched it here two. Now, this was the third touch here. And then you see that something happened. What happened? Something happened. Instead of the market to go up, it didn't. It rather broke it. So remember, this was an uptrend, or it is an uptrend. We've identified a support trend line. Ideally, this is supposed to what? Buy. Because you see, when it hit it here, it went up. Even when it came close here, it went up and then came back again. So we were expecting it to what? Push up. That didn't happen, and then it broke it. Remember, I said that when a support is broken, it becomes a resistance. And you know the role of a resistance in the market. We buy from a support, we sell from a resistance. So the moment a support is broken and it becomes a resistance, it's now going to serve as what? A sell um, level. So look at what happened. Right when it broke out, it went for a retest right on the trend line. And look at what happened. Boom. It sold. So if you were following this and then you knew what's up, you knew how to apply the trend line effectively, then you know that okay, over here the trend line was broken. Price went to retest it. So obviously your ideally is supposed to sell. So you take your sell from here. Now this is 4 hours. So yes, if you break it down, you will get a lot of entries on the lower time frame. So let me go to 30 minutes. Let's see what happened there. Yes, so you see that boom, lower low, retest. So this would have been your first entry here. There was a retest here, your first entry, lower low retest, second entry, lower low retest, third entry, lower low retest, fourth entry. As it kept on dropping, it kept on giving us what entries. So if you missed any of them, no worry, you just look for another. I hope you are getting it. So that's how we apply it. So ideally, when the market comes to it, you know, when market comes to it, it is expected to buy because it's a support trend line. We expect that market will buy from it. It even started shooting up, but couldn't, and then boom, eventually it dropped. When it dropped, what happened? It went back to test it again. So that was a retest, and boom, because it's now a resistance, that's what gave us what this sell. Look at it on H4. It was clear. This is it. Then gave us that beautiful cell. Okay, so don't forget, identify two trend line, 2 points, draw your line and extend it into the future. Wait for price to do whatever it wants to do. So one thing is don't force your trend line to fit the market. No, allow the market to rest on your trend line or the market to fit your trend lines. Okay. So you draw it and wait and see what the market will do around it, and you follow. It's as simple as that. Don't force it that um because it is a support trend line by hook or crook, it should go up because the resistance trend line at all costs it must go down. No, we don't do that here. Wait and see what the market is doing around it and then join. It's as simple as that. Okay, good. So let's see if we can get several examples. I don't know if I did this one. Okay, so I'm going to have to remove this, then zoom out so I can see if, so I have this point here. Okay, I have this lower low here, and then I have this one as well. So I've identified two. What am I going to do? Make sure my line, okay, and it did. So it's touching the two. What do I have to do? Extend it into the future. So I'll put it here. So as it stands now, price has not come back to it. I think this one, sorry, we have a third level here. Yeah, we had this one here. So this is indeed a trend line because we've confirmed three touches. So we can conclude that this is actually a trend line. So it's not always the case that it will hit the line. It can get very close to it because, the line serves as a zone. So when it approaches the zone, it can feel the effects. So we have three patches here. So upon the third touch, we've confirmed that this is a trend line. So as it stands now, what we are waiting for, if this market doesn't continue to buy, we will wait for it. Okay, we will wait for it. We wait for price to gradually do whatever it will do, and then boom, when it drops here, we'll start looking for reversal patterns and then buy all the way to the top. Okay, we'll join the buy all the way to the top. That's what we will do. All right, this will be one of our expectations. Like I said, don't force it. Just wait for the market to do whatever it wants to do, and then you follow it. Okay, don't force it at all. You will definitely get entry and you get your daily bread. I want to believe this is simple. Sometimes you may get the top part. Let's see if in this case we will. I mean, I'm seeing some highs here. If it is meeting, okay, hmm, not quite. So this is the thing. If you are to draw both the top and the down, this side, it should be the same as this, the size, and it should be the same as this. So if it is Kelvin in word or anything, most of the time it's not valid. So you let it go. Mm, you let it go. So this, I wouldn't take it. So I'll take this off. So I'll just focus on this one. Okay, wait for price to drop here. And then boom, I'll take my buy from there. Okay, right. So another caution. This is purely technical analysis. Technically, this is what the market is doing. So we are just following it. Fundamentals can ruin this. Okay. The news impact can ruin this. So around here, if there's a news that suggests that the dollar is going to sell, it will break it. Yeah. So you have to pay attention to that. All right. Let's see if we can get another one. Um, mm, okay. So I think it's okay. Here, let's go to synthetics. So this is for currency. So let's see for synthetics what happened there. So I'll start from here. Remember, I said that for a stronger level, we are going to use the 4-hour time frame. I've done this analysis in the past, so it's very likely to see that I've already done it. Okay, so I saw that the market was doing something, it left this low, it left this low. So I have 2 points here. Okay, I have these 2 points. What do? I extend it into the future. That's all I do. So when the market formed here, right before it came here, I just extended this trend line and then I waited for the market to drop onto the trend line. Then I looked for my buys all the way to the top. Mm, very simple. So I took this buy. I took it with my class. And then just today that I closed the trade, I held it from I think Monday or Tuesday. I held it till today that I closed the trade all the way from here, all the way from here to the top. So if you know what is going on, you just follow it. That's why I said that don't force anything. Do not force anything at all. It's quite very simple. So you just follow what the market is doing. Never force it at all. Okay. So we have this one. Beautiful. Let's see if we can get another one. Okay. Here. Yes, here you can do it. You can draw one here, but I think because the market was packed together, it wouldn't be nice. So let me ignore this. Yes. So this one is not a trend line, but you let me show you something. We spoke about ranging markets. I didn't show you examples. So we said the market forms lower equal lows. So you see that these lows are all around the same price, right? So this is equal low. When we come up here, we have price closing around here as well. Here. Now, this is an outlier. This is also an outlier. So this actually defines the actual range. This defines the actual range. How do you trade this? When market drops to your support level, you look for entries and then you buy. So just like here, we started buying, gave this level, you see a break and retest and boom, the buy is on. Same thing happened here. Okay, a break here and then boom, it's on. What's happening here? We have this level. You can mark it, make price go up a bit, come back to it, and then you join it to the top. Or one, two, three, four, five, six. This is the sixth time that the market has come around the level. So it could be that it has tested it multiple times. So the level is weak. So you can break it. If it does break it, what do we do? Wait for a retest and then we join the market to the downside. So we will not buy from here if it breaks it. We rather look for a retest and then we join to the downside. Similarly, if it comes to the top here, we look for what sell opportunities. We drop it to the support. However, if it does break this, then you wait for a retest and you join a buy to the top. It's as simple as that. So whenever the market breaks a support, it becomes a resistance. So upon a retest, you can sell. Whenever the market breaks a resistance, it becomes a support. So upon a retest, you can buy. That is it. Okay. So this is not trend line, but I had to show you because I think I didn't show you examples of ranging markets. Let me see here too if I can identify any proper trend line. Okay, so I don't see any proper trend line here. So I'll let it go. Let me identify another one. Okay, okay, okay. So this is also not proper. I'll let it go. Then I'll go here. Leave to one next. Is it? Mm, yeah. So let me see if this is proper. Okay, so I have these 2 points here. So my expectation was that market will hit this and then it drop. Didn't quite get there, but I can extend this into the future, just like I've done here. And then my expectation is price will push to it and then, sorry, it will drop. That will be my expectation that price will push to it and it will sell. Okay, that will be the third time. If it goes there the third time and it holds, then that becomes a valid trend line. So we can join the move to the downside. Okay. All right. I think there was another one that I did. Is it this? Yeah, 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 yeah. Mm. So Good. So let me use this as an example. Look at this. This is the first 2 points that I noticed. So I'll mark this. Then you see that price tried to come to it, it didn't get there, and then it bought. Tried to come to it, it didn't get there, and then it bought. So when you draw your trend line, you can always adjust it. There can be outliers. So when I can adjust this so that I'll have more than one touch. Okay, so I have this, and that. So this was an outlier, okay, or a fake breakout. So this is it. So when price comes here, you buy, comes here, you buy, comes here, you buy, right? Came around and then boom, we have this buy that is happening. That's happening at the moment. Okay, so that is how you are going to apply the trend line. So I want to believe this is very simple. I'll make it a long video. I just want to pause here, try and then identify some trend line, mark them, and then share them with me. And let's see if you are getting it. If you're able to apply this now, you have another strategy. Okay, so when the market hits your trend line, you know what to expect. Okay, yeah, don't forget to subscribe, share the videos for more people to, get access to it, like and then comment. So we'll continue to do this for you every weekend. Right. Thank you very much. See you next time.